stocks that we never know what they're in. They're all levered.
You mean the BDCs?
The BDCs.
I haven't heard that much, but if you have a recession, not good, right?
I was going to say the worst possible piece
not good.
of paper.
And private
The
credit,
worst.
not
The worst.
good. And yes.
But
and
what's good? JM Smucker. The worst possible
not
piece of
good.
paper.
And private
The worst.
credit,
The
not
worst.
good. And yes.
People are miserable.
And
what's good? JM's. I had some ho-hos.
Did you?
Saturday. Yeah,
not good
bad.
for you, Jim.
What?
Not good for you.
Who cares? At this point, with this kind of tension.
It's true, and where you are in your life, you can eat anything you want.
Oh no, my grandfather once said that when he was 85. Don't say it to me now.
We didn't mention the Pfizer abandoning this GLP-1.
Oh, but don't get. Well, you know what? Every time they screw up, what do? We're still on it. We're still on. We're doing another one.
Well, they abandoned this one
No, but they got
because of
another
a bad
one.
outcome in one patient.
After they abandoned, Pfizer was actually up. It's up. Wow. Pfizer's up on that. Where would it be if it worked?
I guess there was not an expectation that it was going to be a significant contributor anytime soon.
Goldman barely up after David killed it.
By reading the transcript, yeah. That was
well, no one knew. I mean, David.
No one knew, Carl. No one
knew until you.
He had the megaphone.
Yeah,
exactly. You know, David Solomon. I
just literally read David Solomon's words, one word for word.
You killed it.
Actually, there were more.
What was
words,
the one you killed the other day?
There were more words I could have read. CoreWeave, I remember that one.
He killed CoreWeave. I actually know some of the people involved in the deal.
CoreWeave came back.
David killed CoreWeave.
CoreWeave came back.
Well, David, it's like a 9 lives thing, CoreWeave.
It's 45. It's above where it's well above where it came.
It is above the 40. Yes,
but not where you killed it.
I didn't kill anything.
Oh, okay.
I'm all about giving life.
All right, so everyone involved with the deal was dead wrong when they told me that David killed it. Okay, I get that.
About 1%, 1% gains on the S&P, 54.23. Watch bonds as well. We'll get a little Fed speak today. Barkin shows up at noon. The DXY still below 100, but the 10-year has been coming down, still around 4.4 today. Stay with us.
Jim.
Take a look at the Dow heat map today. Very solid breadth led by a lot of China-centric names. Apple, the best gainer, followed by Nike and Boeing. Only UNH and Amazon, the only components that are currently in the red. S&P's up about 64 points. We'll get Stop Trading with Jim after a short break.
Download the app.
Let's get to Jim and Stop Trading.
So ServiceNow, NOW, Wells cuts price target on a elongated sales cycle. This is something that we have not talked about, which is these enterprise software companies. They've all been bubbling. People feel like maybe they're immune. This is one that says to me, be careful. There could be a slowing in enterprise software, too. Now, ServiceNow is a unique business. Some people say 13% with the federal government. Therefore, you're running into Doge. I just say ServiceNow has not missed their quarter. The last quarter was just okay. They will tell you it was great. But just be aware that if you want to hide in enterprise software, it might be a harder place to hide than today.
We've been through that elongated sales cycle.
It was a nightmare.
Window before.
Nightmare. And I just want to warn people that you don't hide in high multiple stocks. You hide in consistent growth, healthcare stocks, and companies that have nothing to do with anything that Doge could be involved in. I understand Doge is still very active.
Yeah, although now promising 15% of their initial promise.
Well, yeah, well, that's a disparity. It's a disparity between what we thought they were going to get.
Yeah, we're still I mean, it's unclear what the number will ultimately end up being and whether it will be a meaningful impact on the budget over a period of time. Certainly nothing equating to what you would get if you changed the retirement age and Social Security.
Totally. That's what has to happen, but they don't want to do that and make it so that there's real change in Medicare.
How about tonight, Jim?
Okay, I've got a guy named Rusty Brazil who is my absolute oil go-to guy. Oil has been the saving grace, ABM domestic company. Oil's been the saving grace, and to me, very deflationary. Doesn't get talked about enough. in part because I think that it's just lost in the shuffle, not because anyone's trying to have an agenda. It's just lost in the shuffle.
Yeah, OPEC today cutting their demand forecast again.
Yeah. I mean, I want to stay focused on this because oil is what historically it hurt in 73 when you had stagflation.
Wow.
Yeah,
oil intensity was a lot different back then.
Sure was. Did David, let me see how far Goldman is. Did he?
Goldman's doing fine. Goldman is up 1.5%.
David, you better take another shot at it to 10.
Jim, we'll see you tonight. Mad Money, 6 p.m. Eastern Time. S&P up 61. Don't go anywhere. Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Leslie Pickard, David Faber, live at Post 9 of the New York Stock Exchange. Sarah has the morning off. Bulls trying to make some hay out of the notion that these exemptions on electronics, tariff-wise, while temporary, are still material to some popular longs. Apple is the best performing Dow name, even some relief on the 10-year with the yield just around 4.4 this morning.
We're about 30 minutes into the trading session. Here's some big movers we are watching. Late Friday, U.S. Customs published a list of 20 product categories, including semis and smartphones, that it said will be exempt from the White House's 125% tariff on China. Yesterday, President Trump clarifying, quote, there was no tariff exception, announced they are just moving to a different tariff bucket. We'll get the latest from D.C. in a moment, but stocks like Best Buy, Dell, Apple up more than 4% each this morning. Chip stocks also firmly in the green on those headlines. NVIDIA adding to gains on the month after its best week since 2024. And watch big banks. Goldman, the latest of the group to report what executives are saying on the call this hour. Those shares have given back some of the gains of about 1% right now.
All right, stocks are rallying this on, as Carl said, perhaps a tariff reprieve, at least for some electronics. Let's get over to Megan Casella, of course, because it is not as it all would appear. And Megan, perhaps you can explain to us what may be yet to come when it comes to these potential exemptions getting rolled back.
Yes, there's a lot to unpack here, David. So the tariff exemptions that the White House had repeatedly vowed would not be coming, of course, showed up this weekend. A handful of consumer goods, mostly technology, as you guys said, and as you can see on your screen here, all now exempt from the 125% so-called reciprocal tariff on imports from China. They are, though, still subject to the 20% tariff imposed over fentanyl concerns earlier in the term. But administration officials have spent 2 days now essentially saying not to read too much into these exemptions. Here's Kevin Hassett talking to reporters this morning.
Pretty much everything's going to be covered. The question is which law applies. And so if there's something that has a national security effect on things, so if we buy it from some other country, then we might be unprepared in time of war, because if they were to turn off that thing, then that's going to be in a 232 bucket. But then we've got the reciprocal bucket, which is kind of most everything else.
So Hassett and other officials are doing a few things here. They are first trying to knock down any criticism that the president is backing down in his tariff fight by carving out these items. They're also highlighting that 20% tariff still applies, and they are emphasizing that more tariffs on these goods may still be coming. Remember, guys, we've talked about this, but certain goods were always excluded from the reciprocal tariffs. Copper, lumber, semiconductors, and pharmaceuticals all on that list because the White House has long been looking at imposing national security tariffs under what's known as Section 232 on those items. Phones and computers were not initially on that list, but a White House official just this morning told me that they could now be lumped into the semiconductor investigation because phones and computers, of course, are downstream users of chips. Guys?
All right, Megan. So, do we have any sense as to where we stand then on phones or on servers or laptops, for example? And here the key names would be Apple and Dell and HP, all of which are up today. But, of course, there continue to be real questions as to what the ultimate tariffs will be on their products.
Absolutely. We're mostly in a holding pattern, a wait and see. When I spoke to this official, the sense that I got is that the White House is not looking at a separate investigation on those items. They would have to, for example, launch an investigation saying that iPhones are a threat to national security and then imposing tariffs specifically on iPhones or smartphones more broadly. That does not seem to be in the cards at this point. But what they are saying is that this broader 232 investigation, as it's called, into semiconductors could ultimately lump in some users of semiconductors, and that could include smartphones and laptops and other things that semiconductors are put into. It's not definite yet, but that's possible that that's an impact of that study. I'll also caution, though, that we're still a few steps away from this. The White House and the Commerce Department specifically will have to formally launch an investigation, notify Congress, likely have a public comment period, and then rule that they are imposing tariffs. So we're still a few steps away from that, but I will say I am told that even though the president has not signed an executive order formally launching that investigation yet, that the Commerce Department informally has sort of started the groundwork. So they could move quite quickly once that EO is signed.
Megan, I'm curious how we square some of these national security studies with the International Emergency Economic Powers Act, which the administration has used to unleash that blanket 10% tariff. How are those two things different? Is there overlap? How do we think about the authority here?
That's a great question. The main thing to know is that IEPA, the International Economic Emergency Powers Act, as you just said, that had before this term never been used to impose tariffs before. So this is something different. The Section 232, as it's known, national security investigation, the reason that they would go through this process, and as I just said, it's several steps and it takes a lot longer. The reason they would do that is because this administration believes that would set these tariffs more in stone. The IEPA tariffs potentially could be negotiated away. They can be legally challenged. They could be removed by the next president quite easily. They believe that going through Section 232 gives them more permanence. That's why they would go that route.
Interesting. Megan, thank you so much. Megan Casella there. Citi downgrading the U.S. markets to neutral this morning, saying, quote, cracks in U.S. exceptionalism story could dominate the equity investing environment over the medium term. Steve Leisman taking a closer look at the question of America's exceptionalism. Steve.
Yeah, Leslie, following the extraordinary movements last week where stocks, the dollar, and bonds all fell, Wall Street reports over the weekend, again this morning, puzzling over the potentially historic story over whether U.S. markets and the dollar are losing their place at the top of the global financial food chain. Well, former Treasury Secretary Janet Yellen making some extraordinary statements about the topic on CNBC earlier this morning.
Both the dollar declined and U.S. Treasury yields rose. And what that suggests is that investors are beginning to shun dollar-based assets, and that calling into question the safety of what is the bedrock of the global financial system, namely U.S. Treasuries.
So there are two separate questions being discussed around American exceptionalism. The first, whether the outside U.S. returns an overweighting of U.S. and underweighting of the globe by both U.S. and foreign investors, whether that continues. And second, whether there are legitimate questions about the dollar's global reserve status. Barclays writing a very long piece up and down both hands this morning, saying it's hard to think that there will be a liquid and deep alternative to U.S. credit to diversify away from more structurally. Still, even small such moves in reserves over a short period of time can have abnormal price effects. So while stocks recovered this morning, the large part of last week's decline in bonds and the dollar, well, they remain, as do these questions about whether this is a temporary blip, which we have seen before in COVID and again, the great financial crisis, or the start of something more lasting. Carl?
Steve, thank you for that. A great setup. Steve Leisman this morning. Our next guest this morning warns the market and economic turbulence is nowhere near over. Roger Altman joins us here at Post 9 this morning, Evercore founder, senior chairman, former deputy secretary of the Treasury. Roger, it's great to have you back. To Steve's point, do you think there is a turn away from U.S. assets in general?
Well, I think it's too soon to say definitely yes or definitely no. But as so many people have said, including Secretary Yellen, the intermarket movements that we saw over the past few days are very abnormal, and they're inherently alarming. Because, for example, in the most basic sense, when yields rise, at the margin, the dollar strengthens. Because, of course, you get paid more to hold it. And that's not what happened late last week in terms of the dollar Treasury, the duration between the dollar and Treasury yields. Now, is that the beginning of a serious long-term movement away from U.S. assets? I don't think you can say that yet, but it's not something you want to see.
Right. The Times this morning fronts a piece saying it's shaken the faith in U.S. Treasuries, at least. You think that's fair?
Momentarily. I mean, I think you have to take a deep breath and say it would take a lot more for the world to decide, you know, we're moving away permanently from dollar-based assets, or treasuries in particular. I don't think you're at that point yet, but I don't think it's a good development.
What do you think specifically international investors are concerned about it? Is it the destabilization element of it? Is it just the lack of clarity?
Gigantic
or is
uncertainty. I mean, gigantic uncertainty. Tariffs are on. Tariffs are off. There's a pause. There are exemptions. There are 232s. It's very confusing. And investors dislike uncertainty. We all know that. Businesses dislike uncertainty. And you have an awful lot of uncertainty right now. Moreover, there are a lot of people that don't like the tariff policy in the first place. You know, the policy is based on two premises, which you can argue are not correct. One is that if the United States runs a trade deficit with any individual country, that country by definition is ripping us off. Well, yes, there are some examples of that, no doubt about it. Certainly in the case of China, there have been some unattractive practices and damaging practices. But think of it more simply. If this country doesn't produce much coffee or any coffee, countries like Colombia produce a lot of coffee. If the only thing that was traded between the United States and Colombia was coffee, we would run a trade deficit with Colombia, not because they're ripping us off, because we don't produce coffee and they do. Or, the premise that imports are bad. No, imports are not bad. Imports are good. Imports allow U.S. manufacturers, for example, to assemble final products. About 50% of our imports in this country are components for final assembly. Therefore, if you don't import, you don't produce those products, that's less production, less growth, and you don't export them, and exports being high-wage jobs. So the premise that imports are bad also is incorrect. So you have a lot of uncertainty. then you have a lot of people, especially in the business community, that don't like the policy at all in the first place.
Let me talk to you about the business community and that uncertainty, because obviously you advise a lot of corporate leaders. You spend plenty of time in boardrooms. Well, I'm not sure as much anymore because there may not be that many deals going on.
There's still board meetings.
Yes, so there are still board meetings. So what are you hearing, and what are your expectations when it comes to trying to make decisions in an environment like this?
Well, last week, David, I made a point of calling a lot of CEOs because in a time of financial market turbulence like we've seen, extreme turbulence, it's a good idea to talk to your clients and discuss what you think it may mean, what their reaction to it is. And I heard two things across the board to a person that I spoke to. One, they don't like the tariff war. Not a single person expressed support for it. And there's no partisanship here. I'm not calling Democratic CEOs, or anything like that.
Right.
Two, they either already seeing weakness in their business, or they're sure they're going to see some. And that's consistent with growth forecasts being marked down. I mean, at Evercore ISI, we were over 2% at the beginning of the year. Now we're 1% for the full year, and everybody else is doing the same thing in terms of growth expectations. So they're not feeling great because they don't like the policy, and they think their businesses are being weakened by all the tumult around the policy. Because the policy, this erratic on again, off again, up and down, is scaring consumers. And we'll see if that manifests itself. In other words, whether the consumer confidence decline manifests itself eventually into lower consumer spending. I think it will. And it's scaring, it's causing businesses to hesitate.
Yep.
When there's all this uncertainty, what does business do? It says, let's wait until the dust settles before we make big decisions.
Yeah.
And so that's what's going on.
I'm hearing the same from trying to do my job as well and talk to the
now, at the
CEOs.
same
So how long does it last, and does it lead us to a recession?
Well, everybody sees the same people commenting on recession risk, Jamie Dimon and Larry Fink and everybody else. I personally think it's about 50-50, 18 months. But that in turn depends a little bit on where the policy goes and how markets react and so forth. At the same time that businesses, however, are saying, let's wait until the dust settles, in terms of our business, backlogs are high, levels of activity are high, but pulling the trigger is on the shelf.
Yeah, I would imagine that would be the case. I mean, certainly it's hard to do a deal in a market like this where prices are dislocated, not to mention, to your point, the lack of confidence and certainty.
Now, if markets move into a period of calm, I don't know if they will or they won't, but if they do, and a lot of this uncertainty diminishes because the policy becomes clearer, then I think you'll see an increase in M&A volume, almost a certainty. But whether those circumstances ensue, I don't know.
Roger, thanks. Hope you'll come back soon
Always a
and talk
pleasure.
about it. Roger Altman. As we go to break, take a look at our roadmap for the rest of the hour. NVIDIA this morning announcing plans to manufacture some AI supercomputers in the U.S. for the first time. We'll get a closer look at that and a picture of the semis.
Plus, Goldman's earnings conference call underway this hour. Headlines from the call and their report card this hour.
And the FTC's high-stakes antitrust case against Meta heads to court this hour. We're going to get the latest from the ground and, of course, discuss what is at stake for both sides. We've got a big show ahead for you. Don't go anywhere.
That was
Welcome back. The flurry of tariff headlines, a key part of the Apple story today. Stock is a top gainer on the S&P, up 3.5% right now. Let's get to Steve Kovac, who is tracking all the action here. Steve.
Yeah, that's right, Leslie. And just lots of relief in the street reactions this morning after that exemption on those reciprocal tariffs came in. Goldman Sachs raising the price target, but some others cutting targets, including Citibank and JP Morgan. Still some concerns from analysts as well around the global macro environment that could hurt Apple's demand. KeyBank put it pretty well, though. They said, quote, "This is the best case scenario that we can think of." Hard to argue with that one. Friday night exemptions gives Apple all of the options it had before these reciprocal tariffs went into effect to mitigate their impact. That means they can divert production to India and Vietnam, which no longer have those 10% tariffs. Meantime, Bloomberg reporting over the weekend, Apple's now making 1 in 5 iPhones in India. Expect that number just to increase as they divert more over to India. And remember, this was the expectation all along, that Apple would win these exemptions. We remember back before the Trump administration took power that Tim Cook, the CEO of Apple, donated $1 million to the inaugural fund and showed up to the inauguration with all those other tech CEOs. And by the way, there's also less pressure now on Apple to bring manufacturing to the U.S. thanks to these exemptions. And India is going to be the real focus for iPhone production. And that's just for now, at least, though, because we also heard those comments from President Trump and some of his cabinet members. They said no one's going to be off the hook for tariffs, but right now the market is acting as if they will be for good. Carl?
Steve, thank you for that huge story, not just for Apple, but for chip stocks in general, also rallying. Our Christina Partsenevelos is tracking that action. Hey, Christina.
Hi, Carl. Well, the White House's semiconductor tariff investigation only really begins now, but companies are already responding. So NVIDIA just announced plans to establish over 1 million square feet of manufacturing space in the United States, producing Blackwell chips in Arizona and building AI supercomputers in Texas through partnerships with Foxconn and Wistron. This $500 billion AI infrastructure investment, which was announced, not too long ago, about a month ago, it would be over 4 years and could be viewed by the Trump administration as validation of his tariff strategy. TSMC has also promised to spend an additional $100 billion. And as Steve also talked about, Apple promised $500 billion over the next 4 years, really setting a precedent for tech companies and explaining why the market might be a little bit optimistic along with some short covering. Two immediate market outcomes are expected going into earnings season. Companies will likely see stronger early 2025 revenue from pull forward demand as customers really rush to beat potential tariffs, while inventory, that's point number two, stockpiling increases. So that means for customers running lean inventories now, it's risky, especially when chips represent a small fraction of manufacturing costs. The fundamental investment thesis, though, remains intact for a lot of the AI names. All the notes, even this morning, NVIDIA, Broadcom, they should continue to benefit from cloud CapEx spending in 2025, hopefully 2026. Cadence, Synopsys from R&D investment, and Lam Research and KLA from equipment demand that if we're going to be reshoring, we're going to need the equipment. But this geopolitical chess match really means the winners will be chip companies that can quickly shift production to U.S. soil while securing favorable exemptions through their promised domestic investments. The art of the deal, right, Carl?
Yeah. Hey, Christine, I got a quick question. The press release from NVIDIA this morning, was it simply a compilation of things they've already promised, or is there something new in there?
Correct. So it is a compilation of what they already promised. They just didn't provide details or the time frame. So it's going to be within the next year that we'll actually see some traction. The partnership with Foxconn, as well as all new. Previously, Jensen Huang only promised to spend $500 billion. We didn't really have a time frame or details in terms of where in the country as well.
Christina, thanks for that. Christina Partsenevelos this morning. As we go to break, check out some of the biggest gainers on the S&P today, with overall indexes holding on to gains pretty steadily. S&P's up 63, Dow's up 322. As for the broader markets, don't go away. We're back in 2.
to make money.
Welcome back. I'm Silvana Henao with your CNBC News Update. President Trump will meet with the president of El Salvador within the hour amid questions of deportations to the Central American country. The U.S. has sent hundreds of Venezuelans to El Salvador under the 1798 Alien Enemies Act, including a Maryland man the Trump administration has said was mistakenly deported. Democratic Maryland Senator Chris Van Hollen says he's requested a meeting with El Salvador's president to discuss the man's status. A retrial is set to begin today for Sarah Palin's lawsuit claiming the New York Times libeled her in an editorial 8 years ago. Palin says the 2017 op-ed falsely linked her campaign rhetoric to a mass shooting and damaged her reputation and career. The trial comes after an appeals court restored the case last year. And Katy Perry, CBS's Gayle King, and 4 others launched into space today as part of an all-female crew aboard Blue Origin's new Shepard rocket and capsule. The short 10-minute flight took the crew just above the Kármán line, which is the edge of space, Leslie.
They looked pretty calm and collected.
They really do.
All things considered.
Yeah.
Silvana, thank you.
Yeah.
Still to come, who will drive the post-American global economy? Former UK Treasury Minister and former chairman of Goldman's Asset Management Division, Jim O'Neill, joins us next with an answer. And don't forget, you can catch us anytime, anywhere. Listen to and follow the Squawk on the Street podcast. We're back in a moment.
Pretty solid open this morning. Dow's up 400. All sectors are green. VIX below 32. Technology carrying quite a bit of water this morning, up almost 2%. Our next guest just penned an op-ed outlining why now is the right time to reorganize trading arrangements around the world. Jim O'Neill, former UK Treasury Minister and former Goldman Sachs Asset Management Chairman and Chief Economist, joins us this morning. Lord O'Neill, welcome back. Good to see you again.
Nice to see you. Thanks for having me on.
Heck of a piece the other day in which you end by saying it appears Americans are, in your words, destined for many years of turmoil and persistent uncertainty. Doesn't sound like a bullish view.
You know, it's where to start. I've not spoken to you guys for a while. You know, it's hard to understand, especially having lived in the US twice, quite what you guys are trying to do to yourselves in many ways. Does the US want to have continued increases in all its citizens' wealth, or is it just obsessed about being the biggest at everything in the world? Because that's, in some ways, that's at the core of whatever weird thing it is driving Trump to be obsessed with this tariff thing, in addition to aspects of his personality. But the idea that this kind of approach can bring all these wonderful things back to the US and not cause significant damage to the amazing increase in US wealth the past 40, 50, 60 years is just kind of crazy. Right. But it does mean other countries, which is at the core of the piece I wrote, have to think very differently than most of our lifetimes. That, maybe the idea of respecting or being part of a US-based rules global order, and with it, benefiting from trying to help the US consumer get the best goods at the most affordable prices. Those days are over, and they've got to start thinking about having bigger and better trade relationships with the rest of the world and doing more to boost their own economies.
All right. Although your piece points out that rearranging new trade deals is hard. And if they were easy, it would have been done already. I wonder how much friction you think a rebalancing could withstand.
I mean, since I wrote it, an additional part of it is going through my head more and more. I can only imagine that in these negotiations that are now going on with the US, with the supposed 75 countries or however many it is, the US will be trying to stipulate some kind of bits in there about don't do stuff with China or else, and that in itself has pretty important consequences for other countries that are trying to do things with other people. Let me add, Carl, the big thing. I remember I often used to debate this with a sadly ex-departed Goldman colleague who was at the core of everything to do with World Trade Organizations, Peter Sutherland. But at the end of the day, it is countries' relative rates of domestic demand growth that has a bigger impact on trade than trade rules, even though obviously trade rules are really important. And that's the other part of the piece I wrote, that what is interesting in any case, or maybe partly because of people's fear of where Trump was going with the US, Germany has made a big shift in the past 3 months, or 2 months, should I say, with the new government. And it looks to me like the Chinese are itching to come up with a big, more substantive, fruitful domestic consumption stimulus. And those kind of things from two of the economies that, amongst the few that really matter globally outside the States, they're the sorts of things that will be relevant to trade for so many other countries. And they're things that should happen.
Sorry, it's David. Jim, I am curious about your view of China. I mean, there seems little doubt that the Chinese economy will also suffer as a result of this tariff trade war. But I'm curious as to what your expectations in terms of how the Chinese are going to respond, given it is an autocracy, the ability to obviously withstand a lot of pain. How do you see it playing out?
Well, actually, David, something interesting that I've focused on a bit more in the last week and I haven't fully realised. Quite a couple of people I know that have spent some time there recently and speaking specifically to people in the real estate sector happen to be of the view that the Chinese are through the worst on that. And first of all, if that's true, that's quite remarkable because it'd be the first big country that's managed to deal with a massive real estate problem without colossal pain. But more importantly, in this context, that probably gives them more confidence that they're capable of dealing with huge challenges. And it looks to me as though they're playing this both sort of tactically with, is there any sort of consistency and logic behind what the US is throwing at them? And then secondly, what level of policy response domestically should we do quickly, or should we wait to see how other countries are going to go on these trade relationships, and whether we can be part of what our own Prime Minister might encourage with many others, what he's calling the coalition of the willing, not just on supporting Ukraine, but also in international trade. And I think they're probably trying to judge that at the moment. But my guess is they're probably feeling quite confident, which is possibly dangerous, that they can cope with this better than the US can.
So then if U.S. exceptionalism is waning, as some have suggested, who do you think arises as being kind of the next exceptional power? Is it China? Is it Europe? Where do you see those dominoes falling?
I mean, I think the whole notion of this sort of persistent exceptionalism is pretty dangerous. I have to say, I ran into a lot of international business people I know a few times just after the Trump success, and the mood that was so predominant, especially amongst the US people I was meeting, about this sort of persistent US exceptionalism, it sort of sounded a bit sort of corny to me, to be honest. And obviously the US is spectacularly successful in so many things. But it doesn't take long to think of things, I don't know, life expectancy, where the US shows absolutely no greater ability to deal with that than many other nations. One has to be a little bit careful about getting swept up with those things. So I know that's not what you're really asking me, but I think the thing which is interesting, that amongst many, many things that go with all of this, are we finally going to see other parts of the world that are capable of developing their own capital markets sufficiently that they will be a genuine alternative for big investors than US capital markets? It's all well that has now become so quickly the popular mood in the last week that, the US has fatally damaged itself about the reserve status of the dollar. But whilst that is certainly true in some ways, it's not obvious as to what other place at all in the world could offer anything vaguely like that. But there are a few places that could. And if, along with the Germans' change on fiscal policy, they're now going to be a bit more open about actually wanting, along with their European colleagues, to have the euro to be a much deeper and a much bigger international currency that can be used for the kind of depth of volume that the US has enjoyed for so many decades, then there's one. And then, of course, is the never-ending question about, will the Chinese loosen up on some of their controls and allow the RMB to become a more trusted currency, which, to be honest, still looks a long way off to me.
Jim, I appreciate great insight and great piece on the 11th of April. Everybody should take a look at it. Good to see you, Jim O'Neill, this morning. Meantime, the FTC's major antitrust trial against Meta kicking off today. We'll get a live read from outside the courtroom in a moment.
Welcome back. The FTC facing off against Meta as their antitrust trial kicks off today. Let's get to Eamon Javers with the latest from outside the courtroom. Eamon.
Hey there, Leslie. The FTC versus Meta Platforms trial is underway here, and the proceedings are expected to last several weeks. Now, we saw the lawyers arriving this morning, and the stakes here are really high. This is about whether Meta has to spin off Instagram and WhatsApp in a case that Meta complains defies reality. But it's also going to be a high-profile test of the Trump administration's position on antitrust. Is the populist Trump FTC going to take a big swing at big tech? Or will the art of the deal President Trump intervene on behalf of his new friend Mark Zuckerberg, whose striking MAGA makeover in recent months has gratified the White House? A White House official told me on Friday that the president has no plans to intervene in this case. So if all goes according to plan, we'll see testimony from Meta CEO Mark Zuckerberg, former COO Sheryl Sandberg, Instagram co-founder Kevin Systrom. All are expected to testify, as are executives from rival companies, including TikTok, Snap, and YouTube. Now, the FTC's argument here is that Meta should never have been allowed to buy Instagram for $1 billion back in 2012 or to buy WhatsApp for $19 billion back in 2014. But Meta issued a statement on Friday saying the evidence at trial will show what every 17-year-old in the world knows. Instagram, Facebook, and WhatsApp compete with Chinese-owned TikTok, YouTube, X, iMessage, and many others. More than 10 years after the FTC reviewed and cleared our acquisitions, the Commission's action in this case sends the message that no deal is ever truly final. So, guys, there's a lot at stake here, and we should start to get the contours of the trial in the next couple of days. Back over to you.
Eamon, thank you. Eamon Javers outside the courtroom, of course. Former FTC Commissioner Moselle Thompson's right here on set with us, sort of talking through what we can expect here. Good to see you, Moselle. Trying to define whether Meta's a monopolist can often come down to how you define a market. What do you see sort of as the key definition, so to speak, that the government at least will try to maintain here?
Well, they'll try to figure out whether they're calling it a personal social network is the market, and whether there's sub-markets within there. For example, whether Instagram is a separate market and whether WhatsApp is a separate market. And those are messaging apps, and those are visual. That could be photographs or videos. Those might be viewed as separate markets. Now, Facebook would argue that it doesn't matter, even if they introduce evidence that there was anti-competitive intent, that if you take a look at 10 years down the road, whether they actually did thwart competition or not. Because even whether you take that market as a broader social network, and you have Truth Social and all sorts of other things, or sub-markets with X, and you have YouTube, and you have TikTok, that either way, that fear did not actually materialize.
Yeah, it will seem odd to some people that you could go back, as Eamon just said, 10 years or more and say, well, you need to undo this. I mean, does Meta have a very strong defense simply saying, well, look at the intervention of time, and to your point, the likes of a YouTube or a TikTok?
Well, I think what's interesting about this case is it's going to have to be viewed through two lenses. One is, what were people thinking 10 years ago? That means not only dissecting what Meta was thinking, but also what was the FTC thinking? And then try to test whether those things actually occurred through the lens of today. That's what makes it very difficult. And you're right, it sends a very kind of uncertain message to the market to say that 10 years later that we just made a mistake and therefore we're going to unravel everything. So that may actually go to the remedies part, whether the remedy of a divestiture, which is a pretty stringent remedy, is appropriate in a case like this.
It sounds like you think the bar for the government's high.
I think it is.
You do?
I think it is. I think that some of the arguments that they're making are novel. I mean, not only just the remedy in this particular case, but also the how they parse the marketplace is going to be difficult. Now, what they have going in their favor is there is evidence that Meta was fearful of competition from these two companies that they wound up buying. But I also remind people that in technology is also an iterative market, that people rarely create something out of whole cloth. They usually, the acquisition or acqui-hire positions in the tech marketplace is actually fairly common. So this also sends a signal about whether that practice can continue in the way that we've traditionally seen it.
That's an interesting point about the broader implications. Eamon was just describing the MAGA makeover of Mark Zuckerberg. I'm curious if you think that will have any bearing on the government. Will it have any influence in terms of how this case goes?
Well, it is interesting about who has their finger on the scale. If you've been following what's happening at the FTC, and I've mentioned this is unprecedented, that you have an executive order that now says the independent agencies are now going to be brought under the control of the executive branch, which has never really happened before. And second is that now they've taken the unprecedented step of firing to two Democratic commissioners. So there is essentially no dissent or no possibility of dissent within the FTC. So even if the president does not specifically take the reins and say, I'm going to take control of this case, he has a clear way of getting to the outcome that he wants to have.
Finally, Mazel, I mean, we still got a few other anti-monopoly cases. Alphabet, obviously, is the other one. Amazon is still working its way as well. So none of them have been dropped at all at this point.
Right. Well, I think in some ways it's an interesting strategy to keep pressure on the industry, and that leaves you, if you're the executive, the maximum amount of flexibility to cut the deal you want to cut.
Yeah, a good amount of leverage, considerably.
Yes, absolutely.
Mazel, always appreciate your insights. Thank you.
Sure.
Mazel Thompson.
Get a quick check on some of the stocks helping the Dow this morning. A lot of them revolve around China, not surprisingly, given the news over the weekend. Nike now the Dow leader, followed by Apple and Boeing and Cat. Goldman's among them as well. We're going to break down some new numbers out of their earnings today, and now what David Solomon is saying about recession odds in a moment.
prospect of a recession has increased, with growing indications that economic activity is slowing down around the world. Our clients, including corporate CEOs and institutional investors, are concerned by the significant near-term and longer-term uncertainty that has constrained their ability to make important decisions. This uncertainty around the path forward and fears over the potentially escalating effects of a trade war have created material risks to the U.S. and global economy.
That was Chairman and CEO David Solomon addressing the recent tariff-related turmoil on the firm's first quarter conference call. Goldman's Solomon said that client dialogues remain, quote, elevated, and the deal's backlog is up for the fourth consecutive quarter. However, he warned that the firm's ability to execute on these transactions will be dependent on market conditions. Earlier this morning, Goldman Sachs reporting a beat on the top and bottom lines, raked in its third best ever quarterly revenue thanks to a jump in equity trading, which offset declines in investment banking. The firm also authorizing a buyback up to $40 billion. Guys, it's very similar to what we saw with the three big banks that reported on Friday. This idea that equity trading, the more levered you are to that division, the better you did in the quarter. Investment banking still pretty muted. And then there are questions about just the overall financing environment as this uncertainty prevails.
Yeah, I mean, also some questions, at least. It doesn't appear to have been the case. You know, the dislocations we've seen in the market, not just equities, but the bond market as well of late. Did that hurt anybody? But hurt really nothing, and there's been no commentary to that effect on any of the calls so far.
Not really. There have definitely been questions about it and concern whether the CEOs are concerned about the bond market, whether they think there's some kind of risk there. Jamie Dimon of JP Morgan did note that he thinks that, you know, if there is a kerfuffle, was the word he used, that the Fed would step in there and provide some liquidity and it could be solved. But other than that, no one expressing real outright concern about current bond market activity.
I mean, I guess we have made this point before, though, Leslie. There is sort of a dividing line between this quarter and what is the current quarter in a very significant way, given we've really been dealing with the torrent of news related to the markets only in the last few weeks.
Yeah, and that's why I think it's important this quarter, too, to just even de-emphasize where they are relative to street estimates. Because even the analysts themselves are saying, you know, we've revised these EPS numbers, we've revised our prognostications about these companies, and even at the end of the quarter, things were just so uncertain and so up in the air in terms of outlooks. And so I think the market is really just paying attention to some of the color that they're getting from these executives. And they've definitely towed a kind of fine line in the way that they have explained it, you know, in terms of noting the uncertainty, noting that it's affecting client behavior, but not going so far really as to say, you know, these tariffs are a bad idea. We need to get rid of them entirely.
Well, we said on so-called Liberation Day that executives would have about 10 days before they needed to start talking about them on earnings calls, and it's been about that. Solomon did sort of channel their chief economist, Jan Hatzius, saying the chances of a recession have increased, hearing a greater sense of short-term concern, interestingly, from CEOs outside the United States.
Yeah, that was an interesting note, too. And obviously, Goldman has a pretty global presence. They have a big presence in Asia, obviously a big presence in Europe as well. And so that was notable. And he does like to, you know, stick to what their research shows. You know, it's very, I don't know if he's ever departed from kind of what the party line is in terms of, you know, the economic research out of Goldman. So not too surprising.
Yeah, the so-called house view, right?
That's
what he goes with.
That's it.
All right, well, Goldman Sachs shares up 2.5%. We were right near the highs, backed off a bit in the last couple of minutes, but a strong rally with the S&P up 1.5% and the NASDAQ 1.6%, and not necessarily driven by Apple or NVIDIA, though both are up, but more of a broad-based rally. We got a lot more market coverage for you straight ahead.
CNBC.
Good Monday morning. Welcome to Money Movers. I'm Carl Quintanilla with Leslie Picker, live at Post 9 of the New York Stock Exchange. Got a bit of a rally all around the globe. As for our indexes, Dow's up better than 1%, S&P 1.5%, NASDAQ 1.7%. Yields with a little bit of relief here, 10-year back to 4.42, although that's off of the lows of the session. Getting some breaking news out of the New York Fed. Let's get to Steve Leisman. Hey, Steve.
Hey, Carl. So the president's ever-changing tariff policies are playing a little havoc here with the effort to measure inflation expectations among the public. The New York Fed, their survey of consumer expectations out with the much followed inflation expectations up 0.5 point on the 1 year, unchanged on the 3 year, and 2.9 down a tick on the 5 year. But don't get too excited because this survey was conducted before the April 2nd so-called Liberation Day. You can see there it's March 1 through the 31st. The New York Fed also saying that price expectations for food surging higher along with medical care and expectations for rent increases. Expectations for gas increases fell. And this is worrisome here, the probability of a higher unemployment rate jumping 4.4% to 44%. That's the highest since April 2020, so there is some concern out there about jobs. Now, here's the last week's University of Michigan survey conducted after the April 2nd tariffs, but before the April 9th repeal. So not all entirely clear. You can see they surged a lot. New York Fed and the New Michigan, they're pretty close. They usually run together. Unclear how this survey would have looked after that April 2nd Liberation Day. Guys?
Steve, do we expect consumers, survey respondents to keep track with this ongoing change and get that reflected in these surveys?
I think that's a joke question, but it's a real important question, Carl. It's funny, but it's not because, well, first of all, I have been rather amazed that from the very beginning of this tariff discussion, it does appear to be permeating and well recognized by the public just what's going on here. A lot of times these financial issues do not resonate with the public. This one does, and it may be because of the recent inflation run we've had, that inflation remains high. And so they do seem to be paying attention to this, whether or not the April 2nd, the April 9th, and these things end up shaping expectations, I don't know. But there is, for the moment, an important difference between the 5-year outlook at the New York Fed and the 5-year outlook at Michigan. If that 4.5, you can put that chart up again, if that number remains, that's going to be of concern to the Federal Reserve that long-term inflation expectations have deteriorated to the point that they're quite as high, 6.7%, just 3% or 2.9 for the New York Fed. So we have to watch this. And honestly, Carl, your question is probably the most important question that the Fed is asking itself, not only now, but over time, whether or not these inflation expectations become, in the term of art, unanchored.
Yeah. Steve, I'm curious, as you kind of square the inflation expectations with the expectations for a rising unemployment rate, is there a level there that the Fed starts to look at and say, oh, maybe it is time to cut? And how do they do that if inflation expectations are also rising?
Yeah, you just really crystallized the Fed's dilemma right here. I don't think the Fed would act on unemployment expectations. I think the Fed would act on unemployment. So I think they'll watch this. They'll watch the idea that people, that this is an indication, perhaps, that unemployment could rise. This could reflect just a general decline in sentiment, or it could actually reflect people's experience in the job market finding, or in this case, not finding jobs. So we just want to watch that. It's something to be careful about. Consumer sentiment is way down. It's cratered. But as you may know, we reported this morning the CNBC NRF Retail Monitor came back modestly from 2 months of decline. So remember, there's how people feel and what they do, and sometimes those two can be disconnected. Let's hope that's the case.
Steve, thanks. Important number, as always.
Pleasure.
Steve Leisman this morning. Stocks are jumping today, as you may know, following the president's exemptions over the weekend and some of the discussion about them on Sunday. Let's bring in our Megan Casella, try to get an update, Megan, as to how things stand, at least this morning.
Right, so a handful of exemptions over the weekend mean that some products are escaping the worst of the tariffs for now. What we don't know yet is just how long this relief might last. So as of late Friday, a handful of consumer goods, mostly in the tech space, smartphones, computers, some TVs, these are no longer subject to the 125% so-called reciprocal tariffs on Chinese imports, but they are still subject to the 20% fentanyl tariffs imposed earlier in the term. Well, you were just alluding to, the White House spent yesterday and today downplaying the impact here. They've been denying that they were providing relief. And officials in doing this have two goals. They're pushing back on criticism that the president is softening his tariff regime, and they're highlighting that more tariffs, they say, are definitely coming. They say anything that isn't getting a so-called reciprocal tariff now may soon get a tariff for national security reasons instead. So remember, semiconductors, along with copper, lumber, pharmaceuticals, these were always exempt from the reciprocal tariffs because the White House has been promising that they're investigating these imports for national security threats. Now, that could lead to a separate set of tariffs under a different presidential authority, and one that is seen as having a more permanent impact. Now, smartphones and computers were not on that initial exclusion list, but a White House official just this morning telling me they could see tariffs as a result of the semiconductor investigation, given that those items, smartphone, computers, and others, contain semiconductors. So that probe could be broad enough, they're saying now, to include downstream users of the chips. That is not set in stone yet. The investigation also has not yet officially launched. So the tariffs aren't coming immediately on these items, but the upshot still is that the relief these companies are feeling today could prove to be somewhat short-lived. Guys?
Megan, obviously, over the weekend, we saw a bit of whiplash with regard to just the color coming out of the White House and then on the Sunday shows. Is that by design, or what have you heard in terms of just President Trump's economic advisors, and are they on the same page on all of this?
If you look closely at sort of the timeline here, these exclusions were issued late on a Friday. Something like 11 p.m. the guidance came out from the Customs and Border Protection Agency, which imposes the duties. They weren't discussed really at length until Sunday by the administration. So we were seeing the rhetoric come out, and a lot of the thinking on Saturday was they're backing down, they're capitulating to China, they're recognizing that we are dependent on the Chinese market, at least for some of these items that they're now exempting. So a lot of the goal that I'm hearing from industry folks and others who have been in touch with them, this White House, is they're trying to push back on that. They're saying, we're not backing down. You guys are misunderstanding. We're just simply differentiating the type of tariffs at play here, but everything is still going to get hit with a tariff. So they're wanting to sort of still look very strong. And I will emphasize that when they've been doing these country-specific tariffs, there's always been a note of that this is a bargaining chip. This is a way of bringing countries to the table. And as we've already seen the pause put in place, we may see a lot of those tariffs fall off. The product-specific tariffs are meant to be much more permanent, much more long-term. And so the administration, even though they might take a little bit longer to get to those, these are sort of the big ones still remaining. And whatever their ulterior motive is, they're also emphasizing we still have to get to that, and we're still planning on doing so.
All right.
Meantime, Megan, President Xi visiting Vietnam. Some headlines coming out of state media there calling on Vietnam to jointly oppose what they call unilateral bullying. Still no indication that there's anything in motion to even set up a conversation between the president and President Xi.
That's right. President Trump and President Xi, the U.S. trade rep, was very clear yesterday. That conversation has not been had yet. They've not wanted to say the status of that, how the planning is going, but it seems like the White House is waiting for Beijing's call, and so far that hasn't happened. So no talks yet with China, but the administration does emphasize that a lot of other talks are still ongoing, including with Vietnam, at least at sort of the deputy level, not at the presidential level, but among aides. We also know the EU Trade Commissioner is in Washington today for meetings, expecting to potentially get some news on that later as well. So nothing with China, even as they say that they're advancing with something like, I think Peter Navarro said 90 countries in 90 days. We'll see. We'll have to see how those work out.
All right, Megan, thank you very much for staying on top of it. Megan Casella for us here. Let's bring in UBS Alignment Partners Managing Director, Ali McCartney. Ali, so one thing we've been talking about all morning and really for weeks now is just the level that this uncertainty is having and the impact it's having on CEO decision making. And I'm curious what you're hearing from clients on their decision making, because all of that plays a role into kind of the bottoming out of certain assets. I mean, How are kind of market psychology and all of this uncertainty playing a factor in client behavior?
Yeah, look, I think no matter who you are, whether you're an asset manager, whether you're at the Fed, whether you're an investment manager or a client, this is a really challenging market to invest in, right? I always look at the fixed income markets first, having been through a number of financial crises, on an over-the-counter Lehman desk many years ago. And what you look for is any breakage in the fixed income market. And those are stressed for sure, or strained but not stressed. But you want to look at those. I think the issue is there is no way right now to have any conviction on an earnings number for this year. And then you add in a multiple conversation. And to me, the multiple conversation is one and the same as is U.S. superiority going to continue? Is there going to be a long-term outflow because of confidence and credibility into other markets? And so right now, what I'm hearing from everybody is basically if you're underinvested, you're sort of looking for at what point you have enough confidence to get in. And if you're overinvested, which many people were in a sense because of 2 years of 25% movement up in your equity portfolio, then we have been positioning out for a little bit.
Is it possible, do you think, for risk assets to go higher without resolving some of the stress and issues in the bond market?
History tells you that to actually get some level of support and floor, you need to start to mitigate the volatility in the interest rate market. And I know a lot of people have likened this to the pandemic in terms of the exogenous shock and the relationship or lack of cohesive relationship between interest rate markets and equities. And I think that's true. Now, I think you both ask the exact right questions and the ones that most clients are asking me in the segments before. The first is how are clients and customers, more importantly, behaving? I have the benefit of covering a lot of, as clients, corporate CEOs of public and private companies, and they're absolutely seeing the low-end consumer fall off. And in addition to seeing the low-end consumer fall off, there's actually a tier or a striation within that. So we've talked over the last number of years about sort of the haves and have-nots as the wealthier get wealthier because of low cost of leverage and exposure to markets, and the sort of socioeconomic levels get more and more stressed. What they're now seeing is even within the lower socioeconomic level is a difference between, for example, Hispanics and how they are spending versus other populations. And so there's definitely stress in that market. But I think that the bullish narrative here is if you can look through 2025 and you can look to 2026 and you can say, okay, if what we expect to happen, which is over the last couple of days, sort of the left tail coming out of the market with some of these policies you're seeing and some of the negotiation happening in Washington, then, we expect earnings to bottom in the second or third quarter. We expect and hope, fingers crossed, to have more clarity about what earnings look like and can start to extrapolate on multiples. And so then you can have some credible numbers in the later part of the year.
All right. That's what a lot of the models today let's do 275, right, for next year, 18 to 20 times would give you a floor in the 5K range. That's sort of your view as well?
Yes. And so the other thing I would say is today, for example, we are buying in a much more short-term way than we have before technology. The reason not necessarily being just the pure headline, because as you pointed out, just like with every other headline we've seen since April 2nd, there's a lot of back and forth and lack of clarity around it. But what we expect to happen is some of that movement and buying to be brought forward, right? So if we only think this is a 90 or 180-day phenomenon, then what we expect to see, I saw an article over the weekend that was saying that not only are semis and chips being flown in, but Birkin bags are being flown in, right? So some of this concept that we saw during the pandemic of the pulling forward of consumption. So not that markets are behaving fundamentally on a day-to-day basis like they quote unquote should or we expect. But if that is the case, then we should have some of that economic activity brought forward in the second and third quarter, which should mean that we do get a pop in those markets where valuations are very attractive.
Yeah, I think the CFO of JP Morgan mentioned they're already seeing that effect in the first quarter and in the few days of the second quarter. I'm curious, you mentioned kind of just the flows in various markets. And are you seeing, this idea that U.S. exceptionalism, if it goes away, that there are other places to get opportunity? Or is the idea that if the U.S. suffers, the rest of the world suffers, and therefore, where are people looking for opportunity?
So I think you have to differentiate between sort of the short and medium-term view and the long-term view. So the short and medium-term view, and you've talked about this, this morning, is that in order for the U.S. to fundamentally suffer or to cede that position as, that we have had since the Second World War, some other superpower has to come in that is more credible, more reliable, and has, a law system that allows people to trust it. I don't see anybody that fits that bill right now. We've talked about for maybe 10 years how India could be that in a number of years. The EU doesn't seem like it could be that. Russia and China don't seem to have that credibility. We have 70 cents on every dollar invested in our capital markets. So short term, I don't think so. Although we have been buying a little more of Japan and Europe on the argument that we are putting them in a position where they are going to have to figure out what to do, and currency might help them on a short-term basis.
Interesting.
Yeah, on a long-term basis, the question becomes, is that 70 cents of every dollar perspective from a flow metric, can that change? And on a long-term basis, in terms of the multiples we've enjoyed since the Second World War, and especially since the end of the Cold War, I do think that we're at a point where for the first time in my trading life, that is an open question in terms of the breakage and what is actually happening. One of the things I will tell you I'm seeing, I happen to have a lot of contacts and family offices that I speak to in Canada. The way that they're viewing monetary relationships with the U.S. right now is very different than 2 months ago.
It's amazing how quickly all of that is unfolding.
And whether or not it can be undone.
Exactly.
Right? Or every other report this week's been titled Pandora's Box. Is either open or shut,
Yeah, exactly. This is one of those times where I think, more than any other time I've seen, like since the financial crisis, you have to know what you own. It has to be transparent. And, whether that's across firms, whether that's across books, and you have to understand that markets are fragile because liquidity goes from very high to very low. And today, right, we have some great news. We also have the last day you can get liquidity before taxes. So you've got a lot of counter things going on.
Yes, tax day tomorrow.
Thanks for that reminder.
Sorry about
yes,
that.
yeah. No, it's better than telling us on Wednesday. Ali, thank you so much. Appreciate your perspective this morning.
Still to come this morning, Apple shares rallying today after getting that tariff relief, albeit temporary, we think, just crossing back into the $3 trillion market cap club. Is there more risk ahead? We'll talk about that with the stock still down more than 10% on the year.
Plus, shares of Goldman Sachs are rising today after earnings and revenue beat estimates. Strong trading revenue in the quarter, offsetting a decline in asset and wealth management revenue as well as investment banking revenue. Money movers will be right back.